Hello and welcome and happy May 23rd, Memorial Day weekend here in the United States as we celebrate or memorialize those who have lost their lives in the name of fighting for freedom. We do have an extended holiday weekend, meaning a bank holiday on Monday, so there'll be no trading, no Zooms, and I won't be live on Monday. So if you're international and don't have this holiday, take a day off. We'll be back at it Tuesday. Now, I want to thank everybody who takes the time to watch these videos, learn from what I see as a research analyst, and hopefully you're learning, right? Um, just a note, this is not financial advice. Trading involves risk simply for entertainment value and educational purposes to help you see what I'm seeing in trade plans that I'm setting forth. And if you would do me a favor, if you find these value, like, subscribe, and follow, share them to someone that you think might benefit. Also of note, I am live for free Monday through Friday at 9 a.m. Eastern Standard Time. That's 30 minutes before the opening bell on Instagram and on YouTube, where you can follow me at Student Alpha One to see my pre-market report. And I spend about 10 to 12 minutes answering your questions on tickers, and they might just be these tickers here. So, but I'll answer any question in that free time that I have with you. So let's talk about catalysts this past week. We had NVIDIA and Mega Cap tech earnings reports, blockbuster earnings from major tech firms, most notably NVIDIA, solidifying structural AI optimism with strong forward guidance across the sector fueled a midweek rally where pushing the S&P 500 and the NASDAQ to historic intraday all-time highs. Excuse me. The May FOMC minutes dropped. Really, the data was already there that they weren't going to raise, but what's unique about that is we see a behind the scenes of what was talked about there. The notes revealed a deep caution among policymakers and some hints that the next interest rate move could theoretically be a hike if inflation doesn't cooperate. This cooler stance pulled back some markets momentum later in the week. We had hotter than expected global S&P PMI data. The U.S. Purchasing Managers Index, is what it stands for, PMI, showed robust economic expansion, but it came in with a sting. Factory input prices jumped to their highest level since mid-2022. I believe they come in at 6%, where for producers it was projected to be 4.3%. We have, of course, the retail sector, heavyweight earnings from companies like Walmart and Home Depot gave investors real-time health check on American consumer, while overall earnings across the S&P hovered around an impressive 28%. Retail outlooks highlighted the consumer is becoming highly selective due to elevated prices, and we even saw that in consumer sentiment, where consumers are becoming fatigued with gas prices, grocery prices, and costs of goods. And of course, goes without mentioning geopolitical flares on the energy costs. We'll look at the charts, increased pricing in gas, whether or not we have a peace deal with Iran or not. As of the filming of this video, and I sound like a broken record, it seems like we're very close to a deal. Uh, Aided by some of the Middle Eastern countries stepping in and helping with the negotiations, we may have a plan that we could exit soon going into next week on a plan. But if you know Donald Trump, he puts a deadline on it and threatens bombs. So we'll see how that goes. It is back and forth. I think it's 50-50, where we have like a 10% lean towards a peace breakout, at least with Iran, or a deal being done. Remains to be seen. We have to be agile in this period. Some potential catalysts that we have coming forward. We have the big one next week, guys, will be Friday. PCE is the inflation gauge. That's the personal consumption expenditures price index. That's the Fed's absolute favorite inflation metric, because remember, that's what they look at. That will drop Friday, as I said, after hot CPI and PPI prints earlier this month. A high PCE reading will likely kill off the remaining expectations for near-term rate cuts. There are rumors that there might be a rate hike soon if that comes in hot. We'll stay on top of it, folks. We did have Kevin Warsh get sworn in, and an interesting stat for you. Every time we've gotten a new Fed president, the markets have sold off an average of 10% in the coming months. Now, the stock market doesn't always replicate, but it often rhymes. So that will be interesting to watch. Other things we have coming up, we have the next wave of retail earnings like Costco, Dollar Tree, Best Buy, Dick's Sporting Goods. So we'll see where the consumer is with that. And then we have quarter one, Q1 GDP, second estimate and consumer confidence on Tuesday and Thursday. So we'll keep an eye on those metrics. I don't think that we'll see big movements in the market, but it starts to pile in on the attitude of where we are. And then again, Middle East trade, Middle East peace developments and the trade route developments, right? Um, it's tough to predict. I will admit, as a technical analyst, this is very difficult when we have these tweets dropping all the time, um, both ways. Yes, there's going to be a potential peace deal. No, we didn't say there's going to be a peace deal. Uh, yes, we're going to have a peace deal. No, there's not. We're going to bomb. All right. So again, it will be much easier when this is done and over with. And I just read reports this morning that there's over 100 naval ships now from China in the Gulf or in the Seaway near Taiwan. So is that the next escalation? What do you think? Let me know in the comments. All right, let's get into the charts. If there's ever a chart that you would like me to do, if I get enough people requesting it, I'll throw it on the report. For you. All you got to do is comment below and we'll take a look at it for you guys. The charts are next. All right, let's start with the indices as I like to do. NASDAQ. Now, listen, the white line depicts the last time you heard from me in the market movement since then. Okay. I did talk about this strong pullback on this very strongest sell candle that we had since this run. So now the sell at the beginning of the week is the highest since the run. So we had equalizing and increasing sell volume. We're in interesting times right now. We may be topping. We won't know until the data comes in, but I did put in this zone where I believe on the measurement of, if you go back and review my videos, the 1.168 measurement is a good price target. I think we're going to fall a little short of that. I believe that 30,000 through 31,000 may be our blow off top level right now. If we have a peace deal, we'll probably see price spike and then some of the bad data that has been brewing comes in and we see potential sell-off. I do want to share the fact that anybody who follows me, I put out this trade plan. Let me zoom in so you can see it. And we're very successful with this trade plan. And I'll talk about how to monitor it. Midweek, guys, we had both the NYMO and NAMO cooling way off, right? Matter of fact, at the time I put this report out, the NAMO was almost oversold, which means a positive catalyst like a rubber band rebound can push us up. So, and the potential peace deal, the NAMO being overbought or oversold, NVIDIA earnings coming in well. I told everybody that I like the buy plan in this green zone between 29,000 and 29,150 to buy and target near the 30,000 zone, maybe 29,850. We're in the middle of this plan, guys. We are crushing it on leverage. So this is for my NAS traders. If you're trading the futures products NQ, I called that about 100 points higher. Now, how do I get that number? You always want to look at the correlative value between the two. So if I look at the NASDAQ right here, and NQ, the futures product, it's in a contango relationship, meaning that the futures project is priced higher. And right now it's about 114 points difference. At the time I did my call out, it was about 100. It does fluctuate, so you have to check it daily. So that buy zone was about 200 to 250 for NQ. Got a lot of traders in there. Now, if you bought the NAS on my recommended call out, you can see we didn't even go into really drawdown. We tapped the level anywhere in there, and now we've shot up. And depending on your entry, you could be up 600 points. Holy cow, guys, that's a lot of money. So my recommendation now, not knowing how we're going to come out of the weekend, is we're going to mitigate that loss. We're going to go to minimum break even and don't be afraid to lock in profit. My recommended lock in profit that I posted in the groups that follow me and the groups that I work in is right about 350. Okay. So you have two potential stop losses here. Let me move this up. If you want to give yourself a wide berth, there's no reason to take a loss in this trade because we've nailed it. We have nailed it, right? If you want to lock in profit, market structure shows us lock in profit there at 350. That's only 100 points from a price drop. So if we get a drop at Bell, we'll be paid 150 to 300 points, which is phenomenal. If it spikes up, we then can trail it and move it upward. So congratulations to the many people who hit this trade on my call. SPX, let's move over to that. The S&P 500. It is in, let me go back out to the daily because as swing traders, we look at the daily. This is the zone I identified everybody as I felt would be strong resistance, and it currently is. It is approximately 74.50 to 75.15. You can see we tapped it once, failed. We've tapped it twice, failing. This is a hammer candle, which we could potentially move down. Volume is slightly dropping off. However, remember, catalysts can change structure. So if we have a positive catalyst come out weekend, we'll see a spike up. But as of right now, this is a resistance point. Excuse me. That does not mean that I'm predicting a strong sell-off from this point. I'm simply stating that if we turn, this is where it's at. And then a breakthrough this means bluer skies overhead. So you want to make sure you identify that. The Russell 2000, we have the all-time high anchor VWAP, which we've closed above. This is looking positive, but the thing I want you to note that I gave everybody who's buying the Russell itself as an index or the small caps within it, that the pullback see Friday we had to sell off would be this green zone. Now look how accurate that was. It fell right into this zone midweek and ran. So if you're trading that, or I have a lot of traders that do, we actually took a lot of short swings or intraday swings on this and profit. And this is a buy signal. My target for this for strong resistance is really 2950 to 3000, 3015. I think is the near term blow off top target for Russell 2000. And again, RTY products, you got to go do what I showed you to do in the NAS. Bitcoin, I just want to show you, we price monitor it. I'm not going to be a broken record here, but I'm interested in 59,000 to 60,000. The crypto experts that I know and trust as research analysts are calling a cycle bottom at 50,000 in October. We'll see if that hits. There's no way we break that line of the all-time high anytime soon. So we're just running sideways. So I don't recommend it as a buy. I don't recommend it as a sell. Recommend it right now as a hold. The buy is down here. Oil is behaving just as we expect. I've told you that it is trapped in this channel. Intraday or short swings, you can play the $100 level, which we have done because that is a key psychological price. And it's my contention, Donald Trump behind the scenes does not like when oil gets above 100 and he does some deals or does some relief or backs out of some things. The absolute decent short is if we do spike up to the oil shock price in around 112 to 114, looking for a short with risk commensurate to what you're comfortable with, and then just trail it down, right? I think that once peace breaks out, we see 65, we will have support at 84. If the war is still going, we're selling 112, we're buying 84, right? So right now it's a price monitor because I price monitor because it does affect gold. Oil and gold right now have a high negative Pearson correlation. Oil up, dollar up, gold down. Also bond yields. As people run to cash, bond yields up, dollar up, gold down. So we have some pressure on gold right now, which we're going to analyze here momentarily. So keep an eye on that. Although I think gold's a great asset, we're going to talk about it, and silver is also correlated in there. I'll get to them shortly, but you have to understand why gold is not moving, and it's bond yields and it's oil. Let's get and look at a couple key stocks that we're monitoring within these baskets of indices. And guys, I kind of go through this a little quick, so I'm not boring you to death. You can go back and review. And if you didn't know it, the description below, if there's a certain stock you want to look at instead of hearing the full report, it gives you the timestamps. So Google, right? I put this strong resistance box that I predicted last week, and didn't you know it? Look how strong. That is a very strong, almost what we call gravestone doji, which predicts the next two candles being red. So let's see if I was right. Gravestone doji, next two candles red. All right, so that's how TA works. And that's only one layer of confluence, but it's very predictable. That is a very predictable candle on a strong run up that we do have a turn. Google did gap up from 350 to 370. Gaps do provide support, so that's where I'm calling my next target. We could anywhere in that box. If we get a pivot swing, then that becomes our floor as we move back up. That is what is known as a pivot swing. But the two next resistance points are 370 and 350. It is a bit extended. I would look for a discount down here. If you're long term in it, you can see where I put my red line as a suggested stop loss for you guys that bought anywhere in Google or long term holding. And I think a safe stop loss is maybe 340 to 345. If you want to be sure to lock in some additional profits and then catch it lower, I would go below this wick at 362, see if we can hold here. But isn't it ironic that the Fibonacci extension is 1.168? Again, if you followed me and you're trying to price predict, Fibonacci's are great for that because there's no volume at price at that level. The Fibonacci's, and guys, if you don't know how to use these, right, I teach courses on this. Simply DM me here or message me. You can reach out to me if I'm in one of your groups. You can reach out to me at Student Alpha One on Instagram, and I'll send you links to courses you can purchase for a very small fee. Your return on investment is extremely high that you learn how to do this yourself. All right. So it's right now, it's hunting for support. Volume is dropping. So until that volume spikes, I don't see this range breaking. Microsoft is range bound as it has been, neither a buy nor a sell. I like the buy if it drops down around this IPO anchored VWAP. We'll call it, 319 to 325, somewhere in there, a zone. There is structural market support below at 350. The next clear buy signal is breaking this resistance of the all-time high. And again, pointing out we are in a bearish period. If we, which is, what's that called, guys? What is it called? Yes, the death cross, right? Where the 50 crosses the 200 EMA, the 200 is burgundy, the purple is the 50. But you can see if we break this all-time high, approximating the 50 will recross. That will be an institutional buy area because institutions love golden crosses. So if price gets up there, we'll watch it. We'll watch it on the videos, we'll watch it in the groups, and that might be the next buy signal. But for now, it has to breach that and give us a discount, so neither buy nor sell. It is a hold. Oklo, right into the trade plan that I talked about last week. I said support at the IPO anchored VWAP. It was dropping. You have to see signs of support. Well, here it is. 2-day close filter above that. I would demand a little bit of a discount, maybe 61 or 60 to 62 or 3. And we're going to target that all-time high anchored VWAP. If the all-time high anchored VWAP flips, that would be your second buy zone as a buy signal. And again, doing the exact same thing as Microsoft. We're in a bearish period. That would give us the golden cross and this explodes. And again, I think that happens if peace breaks out, right? So you want to be on top of that and be agile. Looking at MP, metals, this is, it tapped into the lower zone. This all-time high anchored VWAP, if you entered this, we talked about it, you should have been break even because the amount that it paid, it did hunt market structure almost perfectly. If we buy off of this is a 1-day close filter here. If we get a second day, that might be another opportunity to buy in around 63 to 65, and then you're going to target market structure and of course the all-time high. All right, if you're currently in this, I know a lot of people bought it a long time ago. Definitely be at or just below 40, or you can move up to 53 for market structure. Again, guys, if you have a trade plan, you're already in a trade, you can reach out. Say, Sean, here's what I want. Here's what I'm here for. Here's my trade plan. Here's my entry. Here's my potential take profit, or I'm trailing it. I'm trailing it based on XYZ. What do you recommend? All right. So I'll kind of help you with that. And ultimately, I'd like you to learn this to do yourself. And I love my students who have learned this and can come with me the trade plan. And really, the accuracy is really good. I'll say, yeah, that's a great trade plan. Consider X, Y, and Z. Or stay with it. You're golden. BBAI, again, it's dancing around this $4 zone, which I've called for the last 2 weeks as a decent buy zone. And I'm really would like a discount down here at that alert in around 250. I will buy a ton of it. We are in a bearish period waiting for, I don't think that all-time high anchored VWAP and this resistance field breaks the first time. So potential entry now, you can mitigate risk below this pivot swing or wait for a greater discount. Pony, I said Pony's looking terrible. It is. I like this lower price down here. This is a little bit of a positive turn on some volume, but we need much more volume. So right now, it is not a buy. I would wait. right? So that's Pony all in the AI sector. Now, QBTS, guys, is killing it. This trade plan that I put out, buying that IPO anchored VWAP, look at this. And I said, run it to the all-time high. I said, if you wanted to hold it longer, you have to then allow it to break down off the all-time high. Guys, I don't make this stuff up. These indicators are flawless. Look how it darn near tapped that within the standard deviation, sold off, and then went through. So this is actually the pure buy signal. Now we had a pure buy signal here. We have a pure buy signal here. Here's a second day closed filter above QBTS. And where did it stop, guys? Where did it stop? Look, market structure. See that? Because there's sellers overhead. Once you learn this, you cannot unsee it, right? Again, return on investment in learning this is extremely high, guys. So what I would do is if you're extremely bullish on this one, the next buy zone will be at or near that retest because we have not tested that zone because once something is resistance, it flips as support. So the current next buy zone is around $25 to $26, and I would get your stop loss definitely at 21, maybe just at 24 in case it falls, but it's looking very strong right now. And how do I know it's looking very strong, folks? Say it with me. Volume. Unfortunately, I made 300% on my trade, got kicked out right here, and I did not re-enter it, but I did make 300% on my trade. So, rotating that money into other things, I'll rotate them into some other high conviction AIs that have not exploded like this yet. I'm not necessarily going to chase this. When I made my money in QBTS, I will consider a strong discount on maybe a strong market pullback because this is a good thesis. IonQ also looking strong, guys. Both trade plans that I called on this paid. Are you following me? Are you listening? IPO anchored VWAP, run it to the all-time high. You got paid. If you ran IPO anchored VWAP, let it pull back. You moved your stop loss to here and then let it run through on the second trade plan, 2-day close filter, buying here. Phenomenal. Both paid, guys. Both paid. We're going to hunt market structure, which I believe this is going to run up to about this level right now. There is no market structure above it. We do have some minor market structure where it hit resistance right at this level. Do you guys see that? That is identical. Once we break that, really all-time highs again, an IonQ. QUBT is moving again, awaiting that. So the trade plan really didn't activate. We came just short of it. So we have to let it run. Look where it stopped. Is that the all-time high anchored VWAP? Is that what I always talk about, guys? Yes. All right. Now it's going to challenge it again. All right. If it flips that on a 2-day close filter, like I've showed you in the previous charts, we'll have our golden cross, and that will be the next buying opportunity. Flipping and crossing in around 15, and then we'll hunt it to market structure for $10 or more and into all-time highs a little bit higher. So stand by and wait. Let's see what it does here. Quadruple U. The first trade plan kicked in. I know a lot of traders bought this and went 50% of the money and got kicked out at break even as it sold out. So zero loss. And a few people took a little bit of profit. Good job. But below that, I predicted this next. So last week, I predicted this buy zone, which it hit, gave you a little bit of drawdown, and is lifting. I think we need to target this all-time high anchored VWAP again. And if it runs, oops, let me redo that. So we got to lower this price just a little. There's your price target into that zone. If that flips, we're going to continue up. Again, these AI data centers are going to require power, and that power will probably come from nuclear, and nuclear is a good thesis. So if you have questions about that, this trade plan of the that we've identified as a cup and handle has a very extended handle and can be a bit frustrating, but I think it's worth dabbling in and out. Let's look at the miners because gold is suppressed. The miners are right now, but they give us some entry points. You can see that this entry in Ego almost paid, right? And is holding. So if you bought it in here, I would recommend a break-even stop loss. All right. If we tap in around 29.30, I think it's a buy again, targeting 36 and then hoping that it flips, breaks through that. And I'll have to do it on volume and we can write it back up. And these will rise if peace breaks out because gold will rise. Same thing with HYMC. This buy zone is currently activated. The second buy zone above the all-time high anchor VWAP did trigger. Well, I called it later in the week to watch for support there. It didn't happen, and we're back down to this buy zone. Again, we are a bit range bound because gold itself is a bit range bound, but it's worth looking into because miners will benefit from this. Iron trade plan off the all-time high anchored VWAP is currently in play. If you bought it here, wrote it up, went break even, depending on where you bought, you might have got kicked out, might have got take profit. If you didn't, you could still be in it. I would recommend now at this point that because it gave the signal, tested the signal, and bounced back up, um, that you go break even. Now look at this. I talk about this all the time. Do you see how the all-time high anchored VWAP was resistance? It flipped, and oftentimes it will retest it. There's your retest, right? What we need here is volume. So iron did test market structure. Look at this. If we break it, we're going to head up into all-time highs. All right, let's talk about metals. Gold. Right now, I put out several trade plans at 4,500, which have paid multiple times. I still like the 4,500 zone. And I've told everybody have skunk orders sitting down around 43,885 to 4,400 in case we catch a wick. And absolutely, there's a lot of sellers down around 4,100 and 4,200. But you're going to have to be patient in around this because this is the range at which we're sitting in gold. You can buy this and have a stop loss below that wick. If you're swinging it, say you're buying 4,500, you could have a stop loss at like 4,440 or and have some ability to buy if we drop to 4,400. Rather, either take the exit or dollar cost average in. Again, piece breaks out, this pops. Silver, a lot of people want to, I don't trade silver, but I do talk about key levels. I do want to say that I have, even this week, I'm buying a lot more. That's physical silver. There's 4 ounces done as a $100 bill. There's 20 ounces. I bought a bunch of this week. I don't necessarily trade it because the charts themselves are heavily uh, manipulated by the CME, but physical silver is not. So I'm buying physical silver. I have for 20 years. I just keep buying it. I believe that we're going to see silver. JP Morgan Chase has it at 350, but we're going to see these highs again in physical silver. Trading the chart's a little tough, but the levels I want you to watch are 71 for a buy. Resistance is the 100, give or take a dollar. The all-time high is resistance at 79, 78. And then below that, 64 and 54, should you see it and you like to trade um, silver, and that could be spot, that could be futures, and that could be ETFs. I personally am buying real silver. Platinum and palladium are very range bound. It's flirting in around that 1885 to 1900 zone, which I believe is a decent buy for a swing with a short target to 2000. So you've got about 100 points in there. And as this continues to compress, it will shoot out of there, forming a pressure cooker. So you can buy there with mitigated loss of 50 points on your stop loss, try to get 100, 200 points out of it. And same thing with palladium. It is sitting right around my buy zone. I talked about 1300. I like that as a buy. You can have a 50-point stop loss and then target this zone right here at around 1600 on a short trade, and then maybe try to hold it long term if it bounces up. But 300 points is a lot, guys. Don't just go into unrealized profit and not take it. I like this short trade plan. Take that, and then we'll look at another trade plan. Copper did exactly what I called, gave this buy signal, paid tremendously, and then later in the week, last week when it sold off, I told everybody watch for support between $6 and 610 and buy it there if you exited or wanted to buy it. Look where it hit. It hit 608 right into my buy zone, and now it's back up. If you bought this on my recommendation, I would go break even at this point. Right. So copper's looking good as well on a very strong thesis. I want to talk about wheat. The wheat buy plan paid tremendously. We would have exited at the all-time high. It did test this all-time high at 636.4. That might be another opportunity because the supply chains are rough. That will be eased if the strait gets opened back up, but there will be a lag. All right. So if you own this and you bought it, get your stop loss right up there at 630. 630 to 637 will be the next opportunity. If it holds, we want that closed filter above it. Looking at some of the wartime thesis, which could cool off, but if Iran cools off and China, Taiwan escalates, these could still benefit. So let's look at them. ITA has yet to hit the zone that I'm interested in with resistance overhead at the all-time high anchored VWAP. So right now it's not a buy. We are monitoring it. Shield, the global X defense tech ETF. Look at the buy plan I called everybody. I'm going to pause for a second, let you see this. That white line is what? The IPO anchored VWAP. And now we're running back up. If you bought this, you need to go break even on your stop loss. And we're going to target, I got to adjust this because we have new prices coming in. This is averaging to 72, right? So this is looking pretty good. But I would go break even in case piece and piece breaks out just to protect yourself. Yes, you don't make any money, but the most important part is you don't lose any money. Palantir hasn't quite hit my buy zone. What did initially and ran up, and it hasn't hit the exit. So if you're holding this, I would go break even, mitigate risk here. I like a downside target on a sell-off in the entire markets, which will affect us at $100. But if you're in this trade plan that I put out multiple weeks ago, about a month ago, I would go break even at this point, and we're still targeting about $156. XOP, my trade plan from a month ago is still in play. Go break even or increase your stop loss in the money at 161. So it is not a buy or sell, it's a hold with break even or locked in money. And we're going to target the all-time high in XOP. Now, guys, I haven't done a new one this week, but remember 2 weeks ago, I put this out, my suggested longer term hold in Lynn, the building corporation. Go back and watch, what is it, 2 YouTubes ago from 2 weeks ago. I talk about it a lot more there. Trade plan kicked in, buying in this zone, and we're slightly in the money. We're targeting about a 50% profit up around 122 from this zone. If you've bought it and you want to reduce risk, you can reduce risk. You can go as high as 80, 70, just below that pivot swing, or you can maintain your stop loss. We do have an earnings report coming up in June. But the beautiful thing about this is it pays 50-cent dividend per share that you hold. You can gain price appreciation, but this is a dividend play. And I had 3 of you immediately reach out to me at the end of this week, very excited that you're in the money on this. And that's the idea. You don't have to make a ton of money on this because you do have a 50% profit target, but the longer you're in this, the more dividends you pay. So congratulations for the folks that take that. It is not too late to buy this. I do expect a bit of an earnings report run up, but make sure you have a protective stop if it runs up. You definitely want to raise to here. But if you haven't got into it, you want to get into it, get a little bit of a discount. The volume is low, so because the volume is low on this bounce up, I expect it to maybe retest that level. And then after earnings, I want to see a volume spike like this to the positive side for us. All right. So I do own this, and also, target 85 or 86 if you haven't entered yet. In wrapping up my report, again, I want to thank you for taking the time to go through this and kind of trusting my guidance on some of these charts. Listen, when I do this for funds, I do much deeper analysis. This is kind of a short quick snapshot for this. There's so many other indicators that I use for confluence and deeper dive that I do for funds that really want deep analysis. But I think this is very accurate for a retailer to get started. And again, I encourage you to buy my courses, reach out, educate yourself, and let's do this together. So without further ado, guys, I'll see you live on social media. 9 a.m. Eastern Standard Time on Tuesday, or in the groups that I operate. Reach out. Let's win together, folks. Thank you for your time.